Okay, so I want to talk about the sources of public expenditure. So the government obviously needs to get money from somewhere, and there can be a lot of sources, not just tax. We know the government taxes, and that's the main source, but where else can the government get money from? For example, borrowing money. The money often, if there's a deficit in the budget, uh, the government will have to borrow money to make up that difference between their income and their outgoings. So if they spend a lot more than they've got in from tax and from other incomes, they'll have to borrow money. Here we've got a picture of a child with this national debt holding her back, being tied to the national debt, because the national debt often goes for decades. Money's not paid back for, could be 30, 40 years. So it's really left on the shoulders of the kids that when they grow up, they'll pay the tax and the government will use that tax to pay the interest. So it won't go on anything useful, just paying interest. Also, they have interest on loans to private sector firms and overseas governments. So, for example, during COVID, there was a lot of loans to the private sector to survive. We didn't want our economy to collapse, so they lent a lot of money to different businesses, different factories to survive, and that will have interest. And also other governments that maybe need money, like Greece when it had problems, that money had to come from somewhere, and it came from other national governments in the form of a loan with interest. So there's maybe interest on loans. Rents from public buildings, often the government has homes for people and they have to pay rent, or maybe they have some land and that land can be used for different purposes for businesses, so they'll get some rents, and then they'll have an income from maybe the taxes, not taxes, the fares on buses, and having to pay your water bill, and maybe the hospitals you have to pay a ticket. And so the money will go into these government agencies and public corporations, and they're a form of income. And then privatisation. Here the government sells businesses, not businesses, but public services, which become businesses. So, for example, they sold lots and lots of shares on the stock market of telecom. Originally, it was public service, and then they sold it to private people in the form of shares, and that was privatisation. Alitalia, the same story, also with Enel and Eni. They were all once public services and eventually became private enterprises, and the government would receive money for the shares, and that would be the price for that privatisation. So that can mean a lot of money, billions of euro can be raised in that way. Okay, so the proportion of tax to GDP is called the tax burdens, and in that way we can compare what model we have of an economy compared to another. For example, maybe Italy, the tax burden is 43% or something, and then we look at the United States, which has a 26% tax burden. So that's 26% of the GDP, and we can compare it with Italy and say, the United States have a low tax model, whereas the Italian system is a high tax model with better social services, you know. So that's the trade-off, if you like. We have better social services and free hospitals, and the United States has lower taxes, and so maybe more possibilities of making money. But we compare the models using a proportion of the GDP. So that's called the tax burden. So tax obviously is the biggest income for any government. A government doesn't make profit, doesn't make money. All the money that flows to the government is public. It's not the government's money, it's the public money. And it's just a form of, it's a tax that must flow back out, not must, but somehow be used in for the good of the nation, of the economy. Maybe it doesn't go out because inflation's high, so they just stop spending. But you know, generally, it's used for government objectives. Okay, so a good tax needs to have equity, and that doesn't mean equality. So it needs to be fair, basically. So the weak do not pay as much as the strong, because the strong obviously have a greater ability to pay. And we can see the difference between equality with the boxes in the picture and equity, where someone small in the picture is given a bit more of a help, so he would have a lower tax, and someone very tall doesn't need a box, so he would have to pay a bit more. He doesn't need so much help. So a good tax should be equitable. Another characteristic could be non-distortionary. So, you know, if you put a tax on income and it becomes too heavy, people won't want to work. They stop working. It's a disincentive to work. So I know, you know, if you have it pushes you to a higher tax bracket, you suddenly go from having to pay 20% tax to 50% tax because you've earned more than 50,000. Maybe you decide not to work any hours if it pushes you over that level, because it will just mean paying the government a lot of money and not getting much back. So this can happen with a tax. That could be a characteristic. It could be distortionary. Obviously, it's better not to be distortionary, but some taxes need to be, just because they need to create enough income for the government. Also, certainty. You've got to be able to know that you must pay and you can't get away with it, and how to pay, you know, what to do. So there's this kind of not too bureaucratic way of paying that's very certain that, you know, there won't be any problems. And you've got to know exactly what you need to pay even. So there's got to be this kind of certainty behind the tax. Convenience. Obviously, if a tax means that you have to hire somebody to calculate it, maybe you have to go around many offices and get certificates and prove things, and it becomes, you know, if there's long queues, it's not going to be convenient unless people will respect the tax. So it should be convenient to be a good tax, well thought through. You've got to be able to pay it conveniently. For example, an income tax is very convenient if it goes direct from your pay to the government. But if instead I have to go and I have to hire an accountant and then I have to go down the tax office during office hours, so I can't work and there's a long queue, this really does will impact the people paying the tax. You'll find some people just keep putting it off and in the end they don't pay it, and that causes more problems. Simplicity. So it should be quite easy to calculate. To be a good tax, you should be able to. I know in England we have, for the self-employed, they just want 3 numbers. They want your income and your costs and then your profit. So if you're a small business owner or a small entrepreneur, you only need to send 3 numbers to the tax office, and it's very simple. And that means, there's less worry. You don't have to know exactly what can be deducted and how to calculate it, etc. So if it's simple, it's better. For example, EVA or VAT, sales tax, is very simple. It's just 20% or 22% of the price. So that's kept very simple, whereas maybe a tax on profits for a company can be very complex. Administrative efficiency. So it needs to be easy to collect and easy to process. If it becomes so bureaucratic, for example, EVA, the sales tax, is quite bureaucratic for the businesses, and that will have an impact on the businesses. They've got to keep receipts, and then they've got to fill out the forms, and then they've got to do lots of administrative things. That can be a burden, and the same for the government. If the government have to do a lot of things, then it's less of a good tax. So that's one characteristic. Lastly, it's got to be efficient in terms of it's got to be able to pay for itself. If the tax means you need lots and lots of inspectors to come round and do lots of calculations, like measuring things or assessing how much things are worth, and then there's big arguments about how much things really are worth, then it might mean it takes a lot of resources to collect the tax and create a lot of headaches and court cases and lawyers getting involved. So this needs to be considered too. There are 3 different tax systems. You've got progressive tax system, and that's when the proportion of tax falls more heavily on the rich. So an example is the income tax. So if you earn more, you pay more. So as you go up the earnings bracket, you are considered to have more ability to pay. A regressive tax may be the proportion of tax falls as income rises. So maybe, for example, often a sales tax can be quite regressive, especially on specific products like cigarettes, because maybe the poor smoke more or drink. Maybe the poor drink more, and also the poor, when they spend money, it's a bigger proportion of their income. We're not talking about taxes on yachts, that's not regressive, that's progressive. But taxes on things like vegetables, it means that poor people have less opportunity to save, and it's a bigger deal for the poor to pay this 20% tax. Whereas the rich, for them, as a proportion of their income, it's not anything to worry about. Proportionate tax takes the same proportion of income, whatever the level of income. Okay, so if it really falls equally on and we're not talking about percentage wise. We're talking about it really does affect the rich and poor in the real life in the economy. So we can call it proportional tax. But generally, taxes are progressive or regressive. They tend not to be proportional because it tends to hurt the rich or hurt the poor more. Okay. Direct and indirect taxation. So when you pay your tax directly to the government, for example, for your income, that is a direct tax. Okay, so normally your income tax, your wealth taxes, any tax on money that you have normally are direct taxes, whereas indirect taxes you pay to a business which then sends the money to the government. So it's indirectly paid to the government. So here, obviously, we've got normally it's form of products and services like EVA. There's lots of indirect taxes. Cigarettes, a lot of indirect tax on those. Okay. Local or national taxes. So local taxes in Italy, the rubbish are local taxes, and in England, in fact. Whereas the cigarettes tax is a national tax. It goes straight to the government's bank account, not Piemonte. Whereas the rubbish is organised and paid for by the local authorities, by Piemonte, the region. So there's that difference too. Okay, an example of direct tax, we can have payroll taxes. Like I said, if you're paid by your employer, you'll have to pay a percentage in taxation. Corporation tax, the business is paying their tax on their profits. Capital gains tax, if you inherit, for example, lots of money, or you make lots of money on the shares, then and a wealth tax, maybe a patrimony. The government sometimes decides to tax people just to pay off a bit of the public debt, and they'll look at people's wealth, or maybe often property, like that's part of our wealth, and they'll say, right, if you own a property worth this much, then you'll have to pay this much in a kind of one-off tax. An impact of direct taxes. So these can be disincentive to work hard. Like I said before, that's a characteristic of a direct tax, and can discourage entrepreneurs from opening businesses. So if you're an entrepreneur and it's a very high tax rate on the profits, a lot of entrepreneurs, especially in Italy, feel like they're working for the state rather than from themselves, and the more they put in, especially small entrepreneurs, often don't want to get bigger because they know they'll end up just paying more money to the government and not really benefiting from it. So it can be a discouragement for entrepreneurs and businesses. But it does redistribute income. It does mean that the rich pay a lot, and then that can be paid towards the poor. Help the poor in different ways, like popular housing, or maybe reduce their tax and pay for services like health and pensions. Also, you can raise a lot of money if you have a good economy with direct taxes. So that's a characteristic. If you have a good economy, direct taxes are a good way to raise big large amounts of income for the government. Uh, Indirect taxes, here we have sales tax, remember, they tend to be regressive and hurt the poor. For example, the poor have less disposable income, so their income that they can spend is less. It needs a lot of paperwork. With indirect taxes means a business must do a lot of paperwork and filling out forms, and that could be really bureaucratic for the business. Sometimes they need to employ people just to do that. So, but it is cheap for the government to collect. They just collect percentage. It's just sent to them, so they don't have to do much. It can be applied to demerit goods like cigarettes, so it can act as a preventative, deter people from smoking, and it can give the consumer a choice to pay, because the consumer can simply not buy the product and just change their spending patterns. So it is, in some ways, that's quite a good thing. You don't have to pay it. Just buy something else. Don't buy cigarettes or something. Okay. Generally, having a lot of taxes can lead to a bigger black economy and a lot of tax evasion. So we see that in Italy. Italy's got a high tax economy, and that means, you've also got lots of people working on the black and doing things on the black, or not filling out their tax forms correctly, or maybe selling goods from going to France and buying, cheap things in France and then selling them in Italy without declaring anything, so they can avoid the IVA, the sales tax. So it can lead to a bigger black economy. It can also, obviously, with the fiscal, effects, increase unemployment. It takes money out of the economy, and so will lower incomes and profits and cause business closures. So a high tax economy, if that is not balanced in some way, can cause a contraction of the economy and end up in problems with employment. Might end up with lots of jobs, expensive jobs in the public sector, and not much of a private sector, which is not very competitive for the country and can lead to big problems in other ways, long-term problems. So, indirect taxes, we've got ad valorem tax, which is a sales tax in Italy. It's IVA. Excise duties, what we put on, for example, cigarettes, petrol, these things that damage, do a lot of damage, drink to people. And so there's extra taxes to pay on those to kind of discourage them. Then you've got import tariffs for foreigners. Often we use those to stop the foreign products destroying our home industry. So to protect ourselves, we have import tariffs. That's an indirect tax. And user charges, which is what we pay to the hospital. When we go to hospital, we need to buy the ticket, or we have to pay a charge when we use the bus. This is considered a tax, an indirect tax, because it's not an income for a private business. It's the government's income.